Well, it's Sunday, June 12th, 2022. This is all about your Benjamins and your weekly mixtape and weekend review video. And as you can see, we're doing things a little bit differently on the video. It is wet out here, so my usual sitting spot is soaked. So I thought I would just hold the camera and do my quick talk because today's weekend review video is going to be short. So let's get to the headlines that may or may not be impacting your financial plan and portfolio. And unfortunately, it's not a lot of good news this week. And I don't know if that's a positive or a negative, that maybe we're getting to the worst news part of the cycle so that maybe we find a little bit of a bottom and maybe begin to move forward. I don't know yet. But the main headlines, as you can see on the news articles, inflation hits 8.6%. So we have not peaked, we've gone up. You've got gas prices at over $5 a gallon on average. I've seen as high as $8. And yeah, those are the two big things. The market didn't like that this week. So you had a big sell-off in points and percentage basis on Friday and Thursday as well. So, you know, I would love to come on here and have a reason that would make us all feel better about what's going on. I also don't want to come on here and continue to say, hey, this is normal. We've got a business cycle, things go up and down. Like, we all know that's true, but I don't think that's what everybody wants to hear right now. So, yes, inflation keeps on going up, and that 8.6 is probably a little light for most of the people out there. That doesn't factor in everything. You look at how much gas has gone up, that's more than 8% increase. So it's getting to the point now where people are noticing it more. I think people are beginning to plan for it more. And this is where I think sometimes these recessions become a self-fulfilling prophecy at some point, because it may be prudent for you to revisit your budget and begin to cut back on certain spendings, or prepare to cut back on certain spendings. And if you cut back on those spendings, then that's less money flowing through the economy, going to the businesses, which will impact their sales, which will impact the revenue, which will bring the stock prices down, which will slow the economic growth, and now we have a recession. So yes, there's these forces that are there, but also I think that the coverage that it gets, and it's in our face all the time, makes us realize it and curbs the behaviors. And sometimes that's necessary. You can't always have rapid growth, whether that is in the economy or in the stock market or whatever it might be. There's got to be periods of slow. Again, there is a business cycle. We've studied it, we know it. It's not a random thing, so sometimes these things just naturally happen. So you got the Fed coming up this week, which will be interesting to see what their comments are. We've had President Biden come out and have some talks that really haven't been really reassuring. So I think that the headlines will continue to be negative. I think that the mood of people will continue to be getting increasingly negative. We look for euphoria that we saw last year in the market and the behavior of people at the peaks, and we look for like the doom and gloom, and I think we may be getting closer to that. Now, how long do we stay there will be yet to be seen. So what does this mean for you? How does this impact you? Well, I think this comes back to having a plan, understanding what your goals are and what is the current landscape doing to your long-term goals. You have to balance that with the short-term goals as well and the short-term needs, but what does this change to your long-term plans? There's Silas over there being in the mulch, not supposed to be there. So what has that done, and do you need to adjust your plan? What is your risk tolerance? We're really getting a test on that with the markets right now. Is now the right time to adjust your portfolio to reflect a new current risk tolerance? Risk tolerance is fluid. It never stays the same. It depends on what's going on in the moment. So it could be personal life things that are changing your risk tolerance. It could be economic things that are changing your risk tolerance. So having a conversation, revisiting what does your portfolio mean to your plan, remembering that the best way to grow with inflation over the long term historically has been through equities. So despite them being down right now, if you're going to keep up with inflation over the long run, your real hedge is going to be staying invested. If you are young and accumulating, then continuing to save and making sure you're able to take advantage of the declining market. So just revisiting your plan and remembering that while it's not fun while we go through these periods, these things happen. The software that we use for financial planning factors in averages, and we can run what-if scenarios. So you should be stress testing your plan to see what happens just for the long-term implications, and then try your best not to inflict more harm on yourself that's going to be long-lasting. Ebbs and flows of the market, those are short-term. Inflation, that's going to have a long-term impact, because once it peaks and becomes to come back down, the prices don't come back down. The new inflation rates build upon these higher levels. So it's almost like a watermark. Like we get up there, maybe some prices will come down a little bit, but for the most part, they're not going to. And then when we get back to average of 3% inflation, it's 3% off the higher prices. So that will be a little bit longer lasting, but hopefully wages continue to grow. Hopefully the employment picture stays strong as well. We talked about it before. It's an interesting dynamic that if we go into a recession with unemployment at all-time lows and tons of jobs out there, it's kind of different. So anyways, I don't want to pretend that I have the answers. I don't have the answers. I think the best course of action is to stay the course with your plan and adjust only if your life requires you to do that. And going into what may be a more turbulent period, maybe you stack a little bit more cash, or maybe take the opportunity to buy these dips in the market as you are a long-term investor. Talk to your financial advisor, obviously, to figure out what's best for you. So that's it for today. Hopefully next week I'll be able to sit so it's less shaky and not making you feel sick to your stomach. But I wanted to get this video out today. So with that, thanks as for always tuning in. Hope you have a great weekend, and we'll see you all in the next episode.